Right. And in 3, 2, 1. Hello and welcome to the second ever episode of Guide to the Grind. Money, mindset, and momentum is what we're doing here. Still working on the intro because this is the first episode that I've actually introduced. The whole thing is Guide to the Grind. My name is Jeff Eady, as usual. Joining me today is one of Canada's top mortgage brokers, a true professional in his area of expertise and even outside of it, the peanut butter to my jelly, Mr. Jonathan Tilger. Jonathan, how are you today?
I am doing phenomenal. Very excited for our guest today. Very excited for the new branding. Loving it. How about yourself, Jeff?
I am fantastic. So I'm a little nervous to introduce this gentleman because we just love him. He's back for a second round. I was so excited when I got the email because this is one of my, I think this is one of our most intriguing guests that we've had because his area of expertise and who he is are just fascinating. I'm going to try and read this and not mess it up, but he is a seasoned real estate and cryptocurrency hedge manager who doesn't just help protect people's wealth. He has actively protected 3 different U.S. presidents while serving on a Marine Presidential Security Force for a top secret facility and Department of the White House. Like, can you see why I'm excited about this guy? Now he focuses on serving investors through alternative asset classes like blockchain technology, cryptocurrency, and specific sectors of real estate. He serves as the VP of Investor Relations for Boron Capital's family of investment funds, whose teams have created triple-digit returns and consistently outpaced Bitcoin. I'm excited to pick his brain and give you guys an insider track on how successfully produce strong returns in cryptocurrency investments. Please welcome Mr. Zach Morrow. Zach, how are you today, sir?
Jeff, Jonathan, I'm very good, but man, you lobbed that one up so high for me. I hope I can grab a hold of it and knock it out of the park here. So I'm gonna like pull back. Hey guys, if you're listening, I'm gonna try to be as intriguing as Jeff has mentioned. So regardless of what happens, I know we're gonna have some fun. We're gonna dive into some exciting stuff in the investment markets. I'm really excited, like you said, about the new direction with Guide to the Grind and everything you guys are doing. So excited to be back. After the first episode, I immediately went back to the team. I was like, hey, see when we can go back with those guys. That is just an outstanding time. So looking forward to seeing which direction we dive in today.
It is episode 100. We had a scheduling challenge and I was actually kind of excited. I was like, this is the perfect way to launch the next 100 episodes. Let's reschedule Zach for this one. So I'm super stoked for this. Zach, okay, first of all, obviously, thank you for your service. That's something I always like to acknowledge veterans. So thank you very much for that. Second, I was talking to a very good friend of mine. I told you just before this, I was talking to an investment banker friend of ours, David Hirsch, who was actually on the show around the time you were actually. But I was talking, I'm like, yeah, they're out of Lubbock, Texas. He's like, Lubbock. I'm like, excuse me, what? He's like, Lubbock. What are you talking about? He's like,
stuff, man.
He's like, it's Lubbock, Texas. Do not mispronounce it.
Yeah. But I'll just tell you, it's super common, right? I mean, Lubbock is definitely, one of the we'll call it the forgotten city out here in West Texas. Dallas, Houston, San Antonio, Austin have been growing so much. But Lubbock really is the hub for West Texas. A lot of people are like, hey, what's that close to? And I'm like, Lubbock, that's what it's close to. We're the hub for West Texas for sure. So, but yeah, man, if you're not from the area, Lubbock is a pretty normal pronunciation. And then everybody's like, no, it's Lubbock, right?
I've been to Texas only a couple of times. I drove through Amarillo once on the way to Phoenix from LA. And DFW a couple of times, but and oddly great barbecue in the airport. That's a strange thing.
Yeah, Texas it prides itself on barbecue for sure.
Oh, it's I really want to spend a lot more time down there. You guys got some great stuff going on in a different world than it has been over the last few years. I follow a lot of very interesting YouTubers who seem to kind of convene around Bernie, Texas. And there's some great guys down there that I'm like, man, I just want to go down and hang out and shoot guns with those guys.
Yeah. Well, the fact that you said Bernie correctly means you actually know people from there for sure.
Well, I follow them. I don't know them.
Oh, okay. Gotcha. That's another one, right? That's another one.
Yeah.
I've had the opportunity a few times being in the Austin area. I got a good friend of mine from high school who moved down there, got a job down there, moved out of Canada down to the States, lives in Texas, lives in Austin, has a family. So I've had the opportunity to go down there a few times and actually drove from there east across and finished in Louisiana, but missed out, but have not been to the west of Texas.
Okay.
But I agree, the barbecue is phenomenal there.
For sure.
All right. Before we get into too many stories that are off topic, Zach, I both curse you and love you for the interview last time, because I took the blue pill and I have been going down the rabbit hole of cryptocurrency, and I think I've achieved this like weird level of enlightenment of online research where it's just entering my brain and I can see the ones and zeros. I'm blown away. I can't pretend like I actually understand everything that's going on, but you guys seem as a firm to be perfectly positioned in time to help people protect their capital against inflation. Do you want to talk a little bit about that?
100%. Before we go out, I'm going to help you out as a friend. In the crypto world, we call it being orange pilled.
Okay.
Orange pilled, right?
Writing that down.
Bitcoin orange, right? So now every time you go and talk about it, now your lingo's ready to go, right? You got to have the laser eyes, right? All those sorts of things, getting in on the little nuances of the community. But yeah, it's really interesting because I think like so many, and a few years back, we really were not heavily involved in crypto, right? And it was something we were watching from a distance. And it was definitely a strong community, and the support was growing, the infrastructure was growing, the adoption was growing, the desire of the projects to become stronger, have stronger utility cases within inside the broader network of how it's used was continuing to grow. And it was really coming into the pandemic. So like in 2019, we had, a handful of multifamily projects and things like that. And we were, obviously working in real estate. We continue to work in real estate. But when we're processing the idea that people are continuing to pay more and live on borrowed money, which in a lot of times is borrowed time. And the only way you can continue to do that is if the trend continues the exact same way, right? And it just seems like a risky move from our perspective. Even though we are such bulls on crypto, I would tell you we're actually really conservative as far as investors go, right? From a principle-based perspective. And so for all the reasons we loved real estate, and the reasons why we were selling multifamily is because people were buying on multiples that did not cash flow. They were financing properties on future earnings, right? What will the pro forma be 3 years from now? And then you're finding financing happening on those numbers when it wouldn't cash flow anywhere close to that on those properties today. So we were like, well, this is a prime time to be able to have some dispositions, just because we didn't feel comfortable with the way everything was going. And so, hindsight 2020, obviously we looked really smart by selling assets, months before the pandemic hit. I wish I could say that was all just virtue of wisdom and we were just top brilliant minds, but it was really just sticking to principles of living with inside your means, continuing to see that living on borrowed money of future earnings is not necessarily the best way to do things. And going back to the core principles of owning assets that we feel like are primed to appreciate over time, primed to do well and maintain utility over the life of the investment, and then also be able to produce income and cash flow during what could, realistically be more unpredictable times. So when we were having those dispositions going into 2020, we didn't we didn't know that a few months later that there was going to be such a large pullback with everything coming in and, pandemic and things like that. But when that did happen, it really caused us to call a big timeout and go, okay, if everything is changing, how's it going to change? How might assets classes change? How might, markets react? How might investors react? And if we're going to be deploying capital, in what type of assets do we want to deploy capital in? And for us, it went back to, like I just said, assets that we felt like stood to withstand kind of the test of time and have that good adoption case and utility over the long term, that then would also have the cash flow and income from a portfolio standpoint to be able to benefit from inflation, but then at the same time, be able to have the incomes and cash flows to allow it to service itself throughout any sort of deflation or contraction within inside the economy. So that led us into a couple sectors of real estate, self-storage, and mobile home communities, and we've been expanding there. And then on the other side of that is really opening up to the world of crypto. And for everybody, as far as inflation goes, there's obviously the near-term talk of what crypto is going to do, right? And what do you have the date in mind of when we're airing this?
It'll be a week, about a week and a half from now, which would be the 20th.
Okay. So for anybody, when you listen on the 20th, we're recording this the day after crypto had a massive drop. So we had a massive pullback yesterday, right?
Oh, really?
Yeah. I was going to say, actually, your timing being on here, because the Bitcoin just dropped to its support level of around 30,000.
Yeah, correct. And then everybody's going to wonder, and everybody keeps asking the question, what's going to happen here, right? But we're about 50% off all-time highs, just below. But we've had this type of pullback, I think, in the last 4 years, right? So it's not that this is something uncommon. And anytime I'm talking to an investor, I think time frame is so important. So we've got so much going on with inflation. Obviously, right now, there's a sentiment within the major markets where, from my perspective, there's been a shift in the community that's investing into crypto, which it is a huge positive, but I think it's going to make the markets react slightly different than maybe they reacted a couple of years ago. And what I mean by that is, a couple of years ago, you really had the diehards, right? All the diehards, the retail investors, they were kind of the first initial adopters. And the way that they operated inside the market a few years ago is different than the investors in the market today. So I think you were going to bring up the fact that institutions are really hungry for this type of investment right now, investment into crypto.
Yeah,
so
pension funds, insurance companies. Yeah.
So I mean, even like people on our team, like we're having discussions with like Texas Teachers Pension Fund and talking, working to get introductions to other types of institutions in these larger companies, right? Insurance companies are adopting it. Major banks are working in integrations for maybe the retail side of it or the adoption side or the custodian side of it. But all these major players are beginning to adapt to have some sort of application within inside the space to be able to either service or invest into it. And right now we've got more of the finance markets have moved into it, but from a baseline perspective, I think a lot of people are still looking at it as just a risk asset. So they kind of are treating it the same way they might treat a risk asset inside their traditional portfolio, right? But over time, I think that as people begin to become more and more educated about the differences between the crypto market versus the traditional markets, I think the more we'll see a decoupling in the correlation. And as stocks are selling off, you may not necessarily have the sell-offs in crypto. But right now, there's so much going on where most of the major money is kind of following the Fed, and everybody's kind of hanging on the words of the Fed. And so, the crypto markets are kind of subject to that presently, but I think year over year, we'll start to see that change. And as I'm allocating capital, I believe that, Bitcoin and certain aspects and investments with inside crypto will stand the test of time, and you'll have more and more money flowing into that. You'll have more stability going into that. And that appreciation within inside of that market will stand to benefit anybody that's beginning to allocate inside of that position. But that doesn't mean you won't be down 50% next month, right? So that's something that I think everybody has to be aware of. So, anyways, I've been talking for a minute. I'll turn it back over to you and let you kind of break it down.
So just to tie into what you say, Because as you say, there's been huge, that's one of the things, hugely volatile in prices. What are some of the strategies you guys do to, I guess, protect the capital of investors, and maybe tie in with that? And I don't know if this is part of the strategy, but you've got the stable coins out there and how those tie in, and how those are different from other coins.
Yeah, 100%. So there's different types of coins, right? And I think maybe if we just start big and go small real quick, if we go really big, I think the first aha, or the realization that most investors need to have inside this market, is that it is its own market. It is its own new financial sector. Okay. This is not just, the technology element of your traditional portfolio. It's a brand new sector. And within inside of this sector, you have different asset classes throughout it. Right. So it's not just, currency where people are all of them are trying to be a currency. You have things that are financial instruments. You have things that are utilized for different types of contracts. You have things that are utilized for what are called governance. You have things that are utilized for, integration for payment systems. There's payroll companies being built through blockchain. There's just a large amount of different sectors within inside this space. And so one thing that we try to do is we try to process from a strategic position. And from a strategic position, you have some companies that might be interested in trying to day trade every up and down. And then you have some people that may specialize in maybe a more venture capital type approach, where they're trying to go and partner at the base level with these companies that are trying to launch, similar to how, venture capital might do. And you have some companies that are going to come in and, they're just going to service as a custodian for Bitcoin, right? If you're an institution and you want to hold Bitcoin, you can purchase through us. We'll be your custodian, hold it for you, secure it for you, and just charge you a fee for holding it, right? And then you're just kind of in a buy and hold with it. What we're doing that really makes us different is we're going out and our goal is to create an index within inside of this space, and within inside this space have different types of projects in the different sectors that put our investors in a position to have a long-term benefit, right? And with us having a more long-term approach, that does mean that the greater part of our portfolio is going to be in more long-term holdings. So some of that is going to ride some of the ups and downs, which means dollar cost averaging in for ourselves and the investors is something that, is encouraged. But that's only if you believe in where it's going to be year over year, not month over month. Now, that doesn't mean that we don't hedge. We do have a portion of the portfolio where we may swing from project to project. We may swing out of projects into cash, and we may be holding a larger portion of cash. And then there are times where we may take short positions or long positions. And we're doing that with, anywhere from, this is not a direct thing, but, just on average, it could be anywhere from 30 to 40% year over year that is turning over and handling that position to help hedge on the downside and then increase opportunity on the upside. But to your next question, as far as stablecoins, a stablecoin is a cryptocurrency that is seeking to peg to the US dollar, right? So presently, the US itself doesn't have a central bank backed digital currency, which would be in essence a stable coin. It's just a coin tied to the dollar. And these stable coins, the idea with the stable coin is for it to be pegged to the dollar. Now, there's a couple of them. I think we'll see some regulation around them. I think actually regulation around stable coins would be to a net benefit. But there are opportunities within inside this space where, think back, 30, 40 years ago, when you could have a savings account with USD and the bank was paying you double digits just to hold in a savings account, right? There are opportunities like that presently in crypto where we can move into cash, which would be a particular stable coin, and then hold those and earn great interest rates on them while we're waiting to deploy at different levels, right? So for instance, with this large drop, well, we've been working between going into January, it was holding a fairly significant portion of the portfolio in cash. And then as we were starting to see the market show some signs of reversal. We deployed some cash over Q1 of this year, and then going really into April, we started seeing some pullback, and so we increased our cash position a little bit there. And then, obviously through this drop, we had a fairly significant cash position. And as we're watching, we're looking for these reversals. And when we can see a trend reversal, we'll then begin looking at redeploying capital to begin buying at lower levels. So, it doesn't mean you can catch the perfect top or the perfect bottom, or, make every perfect decision. But the reality is you're out there, our team's working, tirelessly to ensure we're doing our best to watch the markets, see where sentiment's going. But obviously there's everything with inside crypto, and then you have to obviously manage market sentiment, right? and try to play a little bit of game theory with that as well, because there's the technicals, there's the fundamentals, and then there's market sentiment. And from a fundamental perspective, the crypto market is growing exponentially day over day. From a technical perspective, I'd say, since the beginning of the year, we've primarily had more of a downward trend in 2022. And then obviously from a market sentiment position, I don't know how deep you want to get into inflation, Federal Reserve monetary policy, and things like that. But that's really where you're starting to see market sentiment kind of ebbing and flowing, and kind of just waiting on those month over month, Jerome Powell meetings and the CPI numbers coming out. And so it'll be tomorrow morning that those get released for April's numbers. So we'll see.
But I think back to what you said, I think the most important part is if basically the companies behind the various coins are fundamentally strong, which is the important part, then long term, in the short term will be volatility, but long term, that's where the stability is, and that's where the growth is.
Yeah, 100%. And that's a really important thing for anybody looking to get into crypto. I think a couple of realizations is that, number one, there is real utility today. There is real adoption today. There is real people are using cryptocurrency day over day. I mean, there's billions of dollars being transacted, on a day over day basis. And there's more. And then there's also a lot of retail things coming out with more companies holding on the balance sheet. A lot of payment processors are working on new payment processing options, so retailers could actually accept it and transact in it. Then you've got, this isn't official news, so this is just rumor right now. I haven't heard an actual full press release, but it's my understanding Apple's working on an integration for their Apple Pay where you could connect it to your crypto wallet, just the same way you could connect it to your bank account. They've got 1 billion iPhone users, so all of a sudden, 1 billion people with an iPhone now have easy access to go and spend right from their accounts. Now, for more purists of the space, the retail adoption, as far as like being able to spend it, isn't quite as it's important for certain projects, but I think the adoption as far as understanding an educational curve, the greater people are comfortable with it, the more adoption you're going to see and the more utilization you're going to see. So from a retail perspective, that is obviously extremely bullish. And then more and more people begin to understand it, get comfortable with it, which then brings more money into the market. But the fundamental perspective, like I said, the fundamentals are growing day over day. And we're really looking at, with our due diligence, it's really focusing on a core group, right? We're not trying to hold 100 projects. We're not trying to hold 1,000 projects. We're not creating the new S&P 500. What we're looking for is a solid, 8 to 15 projects that this really creates a great balance for people who are interested in allocation and can, help mitigate their risk on the downside and increase their opportunity on the upside, not be overexposed to one single project, one single coin, and be able to gain access into the market with a professionally managed team. So that's our goal. And from a strategic position, I'm very upfront. Like if we're going to look at month over month numbers, I make every investor look at the worst months. You see this one? This has happened before. Let's look at this good one, right? Because the numbers have been really good year over year, right? But there are months that are really bad, right? And it's going to be significantly different than probably what you've dealt with in, your more traditional portfolio. And so it can be scary. So you have to roll over what you're comfortable with. You have to recognize the downside. You got to be okay with the downside. But yes, from our position, we believe in the long term of the space, in which case we're looking for projects, investments, assets that have a great team behind them with a great track record, great resumes, and a great vision for what they're creating in the future. We want to see good adoption from the actual community. We want to see great utilization of like what they're seeking to achieve, what they are already achieving with the utilization of, how many developers are on the project, how many people are using it, how many day over day transactions and things like that. And then we want to see good coin metrics. So that's one of the main benefits, I think, for crypto that no other financial instrument or investment has really ever had the opportunity, is like, we can see what's going on and off of exchanges day over day. We can see how much is being bought and sold day over day. We can see the volume in real time. We can see all of this on-chain data, basically in real time, where any other investment, you don't have that type of opportunity. So even when the market was going down yesterday, you can actually go on chain and see what is happening and see what's moving, where it's moving from, where it's moving to, and get so much more data so much more quickly than what other assets have ever been able to offer before. So from a due diligence standpoint, we have the opportunity at more due diligence than really any other investment asset class has ever been able to offer. So it's a really neat space for sure.
All right, Jonathan, I'm asking a question now because I'm I haven't been this quiet in years. It also means I'm learning. It's like when a lot of people don't talk when they eat. I don't talk when I learn. Okay, so there's all this crazy talk around volatility, and everybody talks about, what was the one stat I read? €1 invested in 2009 to be worth 60 million euros today.
Yeah, sure.
That's what everybody talks about.
Sure.
But what they're not talking about is the increasing stability, because this low, and I got this from watching actually one of Boron Capital's videos.
Here we go. Yeah.
I was watching you guys, and listen, I don't remember the gentleman's name, but he's one of your traders, and he was talking about the market. He was actually analyzing the graph, and he's talking about higher highs and lower lows.
Yep.
Now, I remember the last big crash in Bitcoin it dropped from like 21,000 down to about 9,000. This one, last I looked at, it was around 35,000. It dropped to 30,000. That's not nearly as low of a low on a grander scale. If you're looking at the timeline of it, there's like the short cycles and long cycles. To me, that indicates long-term stability starting to happen. Do you see Bitcoin as the new gold standard?
So I think that, I'll just say this, I think it's better than the gold standard, right? I'll just say that up front. But I think to become the new gold standard, it would have to be treated more broadly as the gold standard by everybody investing into it, right? So there would have to be an acceptance of that kind of across the board. And I don't know that everybody's treating it as that at this point, right? I think that there was this store of value, it's the new gold sort of narrative. And, I think that I see more people coming into it, but from the way I see people investing into it, I don't see them treating it the same way, people traditionally treat gold. So I can't say that it's the new gold standard, but what I do think is that it has the opportunity to be that and so much more. So, as far as your comment in regards to stability, I think we're still years away from a more traditional operation of crypto as a broader market, because it's not just Bitcoin, right? And most people try to benchmark off of Bitcoin because it really is the dominant force within inside the space, right? So if we're processing Bitcoin itself, I think you may have Bitcoin reach stability sooner than you might have some of these other projects, because they're completely different, right? Because there's new projects coming out all the time that are seeking to do new things. So, and again, when you process it as a broader market, that there really is venture capital opportunity, there really is, financial instrument opportunity, there really are contractual opportunities, there really are different asset classes that are serving different markets, right? I mean, you have art in crypto, right? NFTs, there's an art space, there's a technology space, there's a general service space as far as like, interaction for like what might be a title company and things like that. All of these things are going to be used differently. So as far as the market as a whole, you're going to see I think you'll see different assets inside the market stabilize at different times. Now with Bitcoin itself, I still think we're quite a few years away because the broader adoption hasn't happened yet. And by that, I mean that the larger money that is wanting to get into the space is not able to get into the space at the rate that it would like to, because there's still quite a bit of red tape for these larger organizations to be able to gain access to the space. And I think the larger companies have started their due diligence, and some have started testing the waters, but I think the vast majority haven't been able to begin allocating capital, right? And I think right now the sentiment is that the major institutions might allocate 1% to 2%, right? As a broader number. Well, when that happens, I mean, you legitimately have trillions of new dollars coming into the space, and currently the market cap's right around 2 trillion. So your market cap will exponentially increase, because like, let's say you added 2 trillion new dollars into the market cap, that doesn't then bring the market cap to 4 trillion, right? Because at 2 trillion, it's not necessarily that there's been $2 trillion invested into it, because it's traded on a multiple of whatever has been the last purchase price. It's how markets are made, right? So as those purchasing prices go up, with 2 trillion new dollars coming in, the purchasing prices wouldn't stay exactly where they're at today, right? They would grow exponentially, which means 2 trillion could come in and the market cap could, go up by a multiple. And so what that means is you're going to have these ups and downs while this broader adoption is happening. And I don't think you're going to see stability in assets not only until more money gets in there, but also when all of the money that is in there has come to a consensus as to how they want to treat the asset. So if they came to a consensus that they were going to treat it as a gold standard, well, then you might be able to see it reach a stability where it acts more like gold, right? But I just don't see that happening. So, and to that point, I still think consensus and the education and the adoption from the larger institutions is going to continue to take place over the next few years, which means I believe that there's strong upside, number one, and then I also believe that there'll be continued volatility.
Which, I mean, offers opportunity if you got the right strategy, right?
Right.
and the other part that you just touched on as well, you talked about the pay systems, and part of what I'm seeing is, I think, and this is maybe my naive assessment saying this, but part of it is they're trying to determine, is this a means of trade or is it an investment? Because those are two very different vehicles.
Yeah. Yeah, I agree. And that's why, you have the investment aspect of it, and then you have the retail utilization of it. And, from my standpoint, if I have the assumption, and I do, that Bitcoin will be worth, significantly more in the future than it's worth today, I'll just tell you, I'm not going to be transacting in Bitcoin, right?
You don't want to use it to buy a pizza.
Right. Exactly. Yeah, 10,000 of them.
$500 million pizza.
There you go. Yeah, it's wild, there's so many people that are like, oh man, I wish I would have bought back in 2009, 2010, 13, 14, whatever it might be. And it's like, you probably wouldn't have held it,
I have a buddy who bought in a crypto wallet on an old phone that he threw away the phone.
Yeah, it's so crazy.
He bought like, I don't know, a couple $100 worth in about 2010, 2011.
Yeah, it'd be worth more than a couple $100. That's for sure.
Yeah, and he's struggling. God love him.
Yeah. There's like, I don't even know. It could be a stinking made up meme, but there's definitely one floating around. There's a tweet of this guy like back in 2011, and he's like, and these numbers are going to be off, right? So just enjoy the story and don't focus on the numbers. But it's something to the effect of like, it's 2011 and the guy tweeted like, man, Bitcoin's back to $2. I'm so glad I sold that crap at $6, or whatever, or whatever, And somebody had found the tweet and like retweeted it out and was like, is this guy still alive? And then the original guy who tweeted it saw it and responded and put still alive but dead inside. It's like, yeah.
That's great. I think that illustrates a few things. One is diversification within your portfolio. And two is that there is a gambling nature to all investing and you just don't know. So don't put all your eggs in one basket. And then, of course, with what you guys do is diversification within an asset class is a whole different strategy.
Yeah.
So I think it's important to acknowledge the fact that you guys started out as a real estate investing firm. Is that correct?
Yeah.
How much of your operation is still focused on that versus the crypto world?
So in terms of dollar amount, I would say we're still majority real estate presently, but I think that's slowly starting to shift, right? So as far as the percentages of our total, capital allocated, that's slowly starting to shift. A lot of where we're allocating capital right now has been on the crypto side, and we're still focused more heavily on growing on that side because we don't have as much as we want, right? And we believe so much. You brought up timing earlier. As far as timing goes, I really think that we're in a neat position presently because there's not a lot of opportunity out there of what we offer that affords people the opportunity to come into crypto with a professionally managed team. And we have, multiple years of track record between our management group where we've successfully, led great years year over year and outperformed Bitcoin. And now we're obviously still here when the tide is really turning this direction and more money starting to come into this space. So, I think we are uniquely positioned to be able to help people who are seeking to move in this direction and gain allocation. How much of that allocation are people going to invest? I think on the individual level, I've seen, people as they're starting out, begin anywhere from, 5%, 10. And then, really the more time people are spending with inside this market. And I think, Jeff, it was the same for yourself after our last conversation, was that as you did go further down the rabbit hole, you got more and more excited and more conviction and belief in the space. And that's really the same thing we're seeing here, is the more time people study what's really going on here, the more conviction they have, and you'll see their percent of allocation going upwards. From an institutional standpoint, like I said, it's speculated that, they may start off with 1 to 2% of assets. Obviously, some will choose to do more, but, if you're working in a consideration, I think the best thing you could do is at least begin, right? If you need to start out smaller, but, put some money in so that you have some skin in the game to go do the research. You're going to thank yourself, for going to do the research. I haven't met anybody, that spent 100 hours studying Bitcoin that isn't extremely convicted about the future of the market. So,
I think you talking about the timing. We're 10 years after the invention of the computer. Look where it is now, and look how many fortunes were made in the 20 years following that. I mean, the iPhone didn't happen until the 2000s, when Apple started in the 70s. So I think we're actually at probably the best time, because the first one through the door gets the arrows. We're not there. We get to experience the I wouldn't even say the renaissance, the birth of the market.
Yeah, for sure. And I really think that now really is a beautiful time where the infrastructure has grown. The major institutions are working to get their way into it. The adoption is growing, kind of, in the crypto world, I think the saying goes, eventually and then suddenly, right? So that's kind of how everybody's kind of looked at it, that like, eventually one day, it's going to be something, but when it turns over, it's going to be suddenly, and we're going to see, kind of take off, on a rocket ship as us and our crypto guys and Elon, right, likes to talk about. So obviously glad to laugh at ourselves there.
So Zach, I'm sorry, I don't mean to cut you off. I know we have a time limit and I want to keep you to that. So you've got time to get where you need to get to. I want to respect that. Who are you guys looking to work with right now? Who's the ideal consumer for you guys?
Yeah, as far as our fund itself, we're really in a position right now where, high net worth individuals and family offices really are, kind of the bread and butter of people that are beginning to work with us. And we're in the talks now and kind of expanding into the conversations with the institutions. So, with that in mind, at a base level, the requirement is accredited investor, right? And that's not our rule. That's based off of, the regulations and things like that. And an accredited investor is anybody with a net worth of $1 million or more, excluding the primary residence, or an individual who, as an individual makes 200,000 or more year over year, or 300,000 if it's joint filing with a couple. That's kind of the baseline. So, if you're in that bracket and you have interest in beginning to allocate with inside of this space, it's definitely worth a phone call and getting to know each other.
And how do people do that? How do people find you, sir?
Yeah, for sure. So really the best way, and we tried to make it simple, was just sending a text. So we have a text line dedicated to this. And actually I set it up.
So Gen Y, I love it.
Yeah, let's go. We're it's funny. I feel like I'm consistently the youngest person in almost all the rooms I'm in, but it's slowly starting to shift. So we actually have.
It keeps shifting.
Yeah, it's definitely starting to shift. So, you just text the word info, INFO, to the number 877-771-0615. So text info, INFO, to 877-771-0615. And look, man, if you said so, Gen Y. Look, if we're too forward for you, I'm happy. I'll give you my email as well. Just let me know that, you heard the show, you're interested in learning more, and we can visit from there. And that email is pretty easy there as well. It's info, INFO, at boroncap.com, which is BORONCAP.com. So info at boroncap.com. Either one will work. Both of them actually, I do get the notifications on those. So, you'd actually get connected with me, and I'll be working on the responses and visiting with you.
I have a million things I wrote down that we just don't have enough time for, Zach.
Rapid fire, let's go.
No, you know what? I want to save it for another. Wow, I sound like Ralph Graham. Humming. I'd love to do we'll make this a trilogy. I'd love to have you back sometime in the very near future. And I'm going to increase my knowledge, so that'll probably lead to we're just going to keep doing this every 6 months or so.
It's growing that fast for sure. I mean, all the time.
Oh, it's massive. If you got 2 minutes to hang out after we stop recording, I'd love to chat with you. But thank you so much for the recording, Zach. This was amazing. I know that Jonathan and I are both just fascinated with what you guys are doing, and the idea of creating an index within the space is a whole other conversation. I don't know if you saw the top of my head to blow off when you said that, but I want to thank you, Zach Morrow, VP of Investor Relations at Boron Capital. I did get that title correct, did I not?
Nailed it.
Fantastic. I didn't even have that up in front of me. That's awesome. You heard how you can get a hold of them. Boroncap.com is their website. They are into real estate and crypto investing. Fantastic having you here. Thanks so much for your time, Zach. Jonathan, thank you for joining us. And thank you for listening. We wouldn't be able to do this if there wasn't, all 7 of you listening. We appreciate your time for making it all the way through. If you want to learn more about what we do, you can certainly go to guidetothegrind.com. Zach, Jonathan, thank you. This was a fantastic episode, our 100th episode. You've launched us into the new millennium of our new. How do you say that? Centarium? Whatever. The next 100 episodes. Thanks so much, guys. Have a great day, and we'll see you soon.